The following program is furnished by The Truth About Your Future, LLC. The views expressed do not necessarily reflect the views of this station. This information is education and not financial advice. Consult a financial advisor before investing.
The Truth About Your Future with Rick Edelman is brought to you by Bitwise, the world's largest crypto index fund manager, and by Global X ETFs, dedicated to providing investors with unexplored and intelligent solutions, and by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100, and by Edelman Financial Engines. Rick Edelman is a board member, consultant, shareholder, and client of EFE, but EFE is unaffiliated and has no say over the content of The Truth About Your Future with Rick Edelman.
This is where technology, innovation, and personal finance come together.
This is The Truth About Your Future with Rick Edelman.
And now your host, Rick Edelman.
And a very happy weekend to you. I'm Rick Edelman. Here's what's happening on the show today. My reaction to President Biden's plan to forgive student loans. The latest on the markets. Understanding the covered call strategy. Can you spot a deep fake? And this week's health and wellness segment by my wife, Jean Edelman. Well, the financial markets bottomed on June 16th, and since then, the S&P 500 is up almost 20%, still down about 10% for the year. Is the worst behind us? Well, I just fear that I have the obligation to share with you the notion of the dead cat bounce. That's a phrase coming out of Wall Street. What are they referring to? Well, forgive me for saying this, but even a dead cat will bounce off the floor once you drop it. In other words, you need to make sure that you aren't regarding the problems of the last 6 or 8 months over. We know that we still have the pandemic. We still have environmental issues. We still have Putin. We're still dealing with rising interest rates and inflation. We've got supply chain shortages. We have the coming winter and food shortages around the world and the election coming up. The turmoil is not likely to go away anytime soon. This is raising a very real concern by a great many people in the financial industry, warning that the gains of the past couple of months will prove to be temporary. Now, I'm not suggesting that that is guaranteed the case. Nobody knows for sure what's going to happen next. My point simply is, don't let your guard down. One way that investors try to protect themselves in a declining stock market is by buying gold. The theory is gold is an inflation hedge. So if inflation's going up, causing stocks to go down, gold will go up with inflation. Well, nice try, but so far this year, gold is down 6%. This demonstrates what I've told you for decades. There is no direct link between gold and inflation. Sure, sometimes gold rises with inflation. It did in the 1970s. But other times, like right now, it's not the case. There is no direct correlation between gold and inflation. One other aspect that's taking a lot of attention these days is residential real estate. Home sales here in the U.S. have dropped in July for the 6th month in a row. The median sale price is now down 10%. Houses had hit a peak, the median price of $430,000. That's now down to $420,000. And in July, 16% of sales agreements were canceled. That's the most since COVID began. We're also looking at a decline in housing permits. They're down 1.3%, and housing starts are down 10%. Now, we got to pay attention to all these numbers. Housing permits, housing starts, and housing sales. What do they all mean? Well, they are all economic indicators. We're all trying to get an indication of how the economy is working. Economic indicator. And there are 3 kinds: leading, coincident, and lagging. You've heard of the phrase leading economic indicator. I often wondered, what on earth did that mean? What's a leading indicator? I always thought it meant popular. It's a leading, whatever. No, it doesn't mean popular. Leading means in advance. In other words, 3 kinds of indicators: leading, coincident, and lagging. Leading indicators tell you what's going to happen. Housing permits. If you want to build a house, you got to get a permit. So if there's a lot of housing permits, that's telling us that a lot of houses are going to be built. Housing permits are down. which means we're not going to be building as many houses over the next several months. That means fewer jobs in construction. And if you don't build a house, you certainly can't sell it. So, with housing permits down, that's a leading indicator telling us that the real estate market will be doing worse in months to come. And how about housing starts? This is a coincident indicator. It's telling us what's going on right now. The construction has started to build the house, but housing starts are down 10%. We're currently building fewer houses than we were. And finally, housing sales. 16% of the contracts were canceled. Fewer houses are being sold, and the ones that are selling for less. All three indicators are bad right now for housing. Housing permits, housing starts, and housing sales all show that the housing market is entering a recession. We'll feel it in the next several months. This is a big deal because the housing sector is the most important single sector for the entire American economy. It employs more people and it has a bigger impact. Think about it. When you buy a house, it's a huge financial transaction with tens of thousands of dollars to the real estate agents, employing so many people, the construction industry, not only the real estate broker, but the mortgage broker, the title settlement. You're going to hire a moving company. You're going to buy new appliances and lawnmowers. You're going to find new dentists and doctors and butchers. The economy just gets such a jump when there's a big activity in housing. And now all three of those indicators are down. This isn't good news for the fall and winter. You know what else is down right now? The resale market for luxury watches and handbags. It's crashing. Prices are down up to 50%. The Rolex Submariner, one of the most popular watches in the world, its prices are down 46% since March. Guess who's reporting a big rise in customers? Pawn shops. Because if you have got a struggle economically and you need to come up with cash, you'll sell your bling. And who are you going to sell it to? A pawn shop. So when pawn shops do well, that's usually pretty bad news for everybody else. What these people are doing, selling their fancy watches and handbags, they're trying to avoid going into debt. Well, good for them because total global debt is now pretty high, 28 percentage points above pre-COVID levels. That's relative to GDP. The total global debt is now twice as high as it was in 2006. And we know what 2006 foreshadowed 2008. Meanwhile, the Federal Reserve Bank of New York says U.S. households have $16 trillion in debt. That's $2 trillion more than before the pandemic. We're beginning to see delinquency rates, all rising for car loans, credit cards, and mortgages. And if all that's not bad enough, we've got the warnings coming out of Europe regarding energy. The CEO of Shell has warned that Europe might need to ration energy this winter. Germany has to cut its gas use by 20% to avoid shortages. And the European Union is in agreement. It has told its member countries to cut energy consumption by 15% between now and spring. Russia is slashing gas exports. They're using energy as a weapon in the war against Ukraine and a weapon against the rest of the world. And we're using the economy as a weapon as well against Russia, and Putin sure looks like he's hitting back. Russia provides the European Union with 40% of its oil and gas. So this 15% order to reduce usage is not just for government and business in Europe, but also for individual consumers. It certainly looks like our market volatility is going to be with us for some time to come. I'm Rick Edelman. Coming up next on the show, the president's new proposal to forgive $10,000 in student loans. Just wait till you hear my rant. It's next.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities along the way. But where to start? At Global X, we have spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these disruptions are now part of our daily lives, like fintech and telemedicine, others are making their impact felt behind the scenes, or perhaps under the hood. Think of the lithium batteries that power electric vehicles, the rise of hydrogen fuel cells, or renewables like solar and wind, which are becoming increasingly cost-competitive. All of these themes represent vital components of a next-generation green energy economy that is more reliant on innovation and less dependent on fossil fuels. Learn how you can add these and other green investment themes to your portfolio at globalxetfs.com or ask your financial advisor.
This is a call to the self-starters, to the self-made, and the self-sufficient. It's time to declare a new kind of independence, because Edelman Financial Engines is here to provide tailored investment solutions for your kind of wealthy. You should expect more from your wealth advisors. Our investment management approach is based on Nobel Prize-winning research, and our planners don't sell products to earn commissions. And because we're here for those who question the answers, we model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. So no matter where you're going next, see what we can build for you. Call 833-301-4333. That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines, built for those who built themselves.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
You're listening to The Truth About Your Future. Well, President Biden made the announcement this week. It's official. His plan to forgive massive amounts of student loan debt. This has been a long time coming. It was a campaign promise of the president, and now he's gone and done it. The average student debt in this country is about $30,000 per student, and he's now going to forgive $10,000 of student loan debt for everyone who makes less than $125,000. $250,000 if you're married. That's pretty much everyone who has a student loan in this country. For sure, 43 million people are going to be eligible for this student loan forgiveness. And if you owe money to Pell Grants, you're getting $20,000 in debt forgiveness. And for the rest of your student loans, you're not going to have to make any payments until next year. This makes it 7 times that the president has put a moratorium on repaying student loan debt. Gee golly, all these announcements, by sheer coincidence, are just in time for the elections. That's the cynic in me. Hey, forgiving all these loans, it's going to cost the government almost $400 billion. And guess who's getting most of the benefits? Not low-income workers who can't afford to repay the loans. 3/4 of the benefit is going to people who are in the top 60% of wage earners in this country. That's according to a study by the Wharton Business School. Biden has already canceled $32 billion in student debt for 2 million people. Here comes more debt cancellation for 33 million more people. And no one is going to be happy about this. Those on the political left, they wanted him to forgive $50,000 in student loan debt. So this $10,000 isn't enough for them. And those on the political right, they hate the idea of yet another government giveaway, which will only increase the federal debt, raise inflation even further. And every fair-minded person, that's me, We hate this idea simply because it is so unfair. How do you feel about this? If you paid for college out of your savings, you get nothing from Joe Biden's plan. Or what if you worked your butt off to earn enough money to pay for school? You get nothing from Joe Biden's plan. Or what if you borrowed the money somewhere else? You didn't get a student loan. You, say, refinanced your mortgage or used credit cards. You get nothing from Joe Biden's plan. Or what if you decided you couldn't afford college because of the huge cost? You didn't have the money, and so you didn't go. You get nothing from Joe Biden's plan. Or what if you didn't go to the college you really wanted to attend because you couldn't afford it? You ended up going to a less expensive school, a second choice school, because you didn't know the government was going to step in and cancel your student loan debt. You get nothing from Joe Biden's plan. So the only way that anyone can possibly be in favor of this plan is if you're among the 43 million people who are going to be benefiting from it. You're not focused on fairness. You're being selfish and greedy. This loan forgiveness doesn't make the debt vanish into thin air, by the way. It's still a bill that has to be repaid. And as long as you're not going to repay it, then all the other American taxpayers are going to have to repay it. Thanks, but I'm one of those taxpayers, and my wife and I paid for our own college, thank you very much, and we're helping to pay for college for our nieces and nephews right now. I really don't feel like paying for yours, too. Hey, sorry if that offends you, but I'm tired of paying for my car, so how about if Joe Biden forgives my car loan? I'm tired of paying on my mortgage. How about if Joe Biden repays my mortgage for me? I'm tired of my credit cards. How about if the government picks up that tab, too? Look, even some economists who are Democrats hate this idea, like Larry Summers. He was Bill Clinton's Treasury Secretary. And Jason Furman, an economist in the Obama administration. They both hate this idea. They say it's going to result in future tax increases for everybody. Oh, and get this. Most of the loans that are going to be forgiven under the president's plan, they're loans who were taken out by people who, frankly, don't need help repaying it. Half of all U.S. households in this country are married couples. And all of them who earn up to $250,000 qualify for this $10,000 loan forgiveness. $250,000? Guess who earns $250,000 or less? Airline pilots, chief executives, dentists, pediatricians, physicists, architects, judges, astronomers, physicists, podiatrists, marketing managers, makeup artists, financial managers, petroleum engineers, air traffic controllers, pharmacists, computer engineers, lawyers, compensation managers, sales managers, purchasing managers, HR managers, optometrists. All of these people are earning between $125,000 and $250,000. And if they're married, they're going to get $10,000 in student loan forgiveness. Do these people really need to get that $10,000? And the worst part is this. It's not going to do any good for any of them. Look, if you've got student loans, you haven't been making payments anyway for more than 2 years because the repayments have been suspended due to the pandemic. Everyone's back at work now, but for some stupid reason, the student loan payments haven't resumed. And now President Biden says you still won't have to make payments for the rest of the year. So forgiving the loans isn't really doing you any good because you haven't been paying the loans back for years, meaning this isn't putting any money in your pocket. You've already diverted the money that you used to pay for student loans to other expenses. So all this means is that you're not going to have a new bill to start repaying. If President Biden really wanted to help people and the economy, he'd give those 43 million people a check for $10,000 each. Let them spend the cash now, just like all the other stimulus money that the government gave out during the pandemic. That was $6 trillion of stimulus. This is just $400 billion. So why doesn't he just do that instead? Forgiving the debt isn't really helping anyone. We're going to have to see if Congress goes for this. The president says he's doing it by executive action. Congress may come up with legislation to prevent him from doing it. It only takes one Democrat to say no to this. We're going to see if anybody's got the guts to vote now during the election season. I'm not sure even any Republicans will vote against it because pretty much every voter everywhere wants this deal. That's because just about every voter everywhere owes money to student loans or has someone in the family who does. And hey, we all love free money, don't we? Even if it's not fair, even if it's not helping. And now that the government is willing to forgive student loans, the government is going to be encouraging all sorts of bad behavior. Colleges are going to raise tuition. They figure, why not? We'll just increase eligibility for student loans because the government will just cancel those loans in the future. President Biden's proposal also says that if you earn less than $30,000, you don't have to make payments on your loans. He's actually encouraging people not to work because if they do work, they've got to pay the loans back. But if you don't work, you don't have to repay the loan. 200 years ago, you got thrown in prison if you didn't repay your debts. Now you get rewarded. This entire proposal is teaching precisely the wrong lesson and rewarding people for all the wrong behaviors. If we persist in bad public policy like this, the economic future of our nation is at risk. And that's the truth about your future. Oh, and you know what else is coming in your future? Lots of legal challenges to the president's new plan. This ain't over, and it's going to culminate with the November elections. Stay tuned. Let me ask you a question. Will your money last as long as you do? That's what my new master class teaches you. Financial planning in the age of longevity. Thousands of people watched my first master class, The Truth About Crypto. Now, here's my new class. You can watch the class whenever you like. Register now for free to watch my new master class, Financial Planning in the Age of Longevity. Sign up now at thetruthayf.com. A lot more to come. Stay with us for more on The Truth About Your Future.
Need help managing the complexity of income needs in retirement? Meet Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Tell them how much you need and how long you need it to last. They'll estimate how much you can spend. Plus, you can start, stop, or adjust payments anytime without penalty. And with Schwab Intelligent Portfolios, you won't pay an advisory fee. Visit schwab.com/intelligent income to learn more about their modern approach to wealth management.
Allow us to introduce you to Tom, an ordinary person who helped shape the future by putting his money behind the right ideas. Tom enjoys tending to his tomato garden and is currently developing the perfect blend for his homemade spaghetti sauce. Tom is also accessing companies that help change the course of the aerospace industry by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a rocket scientist to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
You're listening to The Truth About Your Future with Rick Edelman, sponsored by Choice. Choice is changing the way Americans save for retirement by making it possible to invest in Bitcoin, crypto, and other alternative assets inside your IRA. That's right. Whether you open a deductible or a Roth IRA with Choice, you can invest in Bitcoin and 22 other digital assets in your retirement account. You can also buy stocks, mutual funds, ETFs, gold, real estate, and more, all in a single retirement account. There's no hidden fees or account minimums, just more control over your retirement savings. And Choice makes it ridiculously easy to combine all of your old retirement accounts with a rollover concierge service. So if you've switched jobs in the last few years and have been putting off rolling over your old 401k, make sure you check out Choice. Head on over to retirewithchoice.com/Rick. That's retirewithchoice.com/Rick.
You're listening to The Truth About Your Future. One of the problems we're having with today's economic environment is particularly impacting income-oriented investors. Is that you? Are you looking for income from your investments? If you've been struggling for years in this situation, haven't you? Because interest rates have been at historically low levels for the past several years, and it's a real challenge. If you've been trying to generate income out of your investments, it hasn't been too much of a pity party because, for the past decade or so, even though you haven't been getting a whole lot of income out of your bank, interest rates being very, very low, and your bonds have not been generating very much in yield, so what? The bonds have been rising in value, and so has the stock market. So even though you haven't been generating a lot of income, you've been generating a lot of growth, and that growth has compensated for the lack of income. All's been good. But suddenly, like the beginning of this year, that story changed. Stocks haven't been rising. In fact, they've been falling. Bonds, not only are they still paying low rates of interest, they've been falling in value as well. And so this has been a real unexpected shock for income-oriented investors. And income-oriented investors tend to be older and more fiscally conservative for obvious reasons. If you're in retirement, you care about generating income off of your assets. And you're being in retirement, your attitude is, rightly so, you don't have 50 years to make up the losses that you may be incurring. So it's been a real challenge. And that's why I want to mention for you an idea that we haven't really talked about much on this radio show over the past, 20 or 30 years. But it's something that is worth consideration today because today's economic situation is different than it's been for the past 20 or 30 years. So I'm going to mention something that I wrote about in my first book, The Truth About Money. And I haven't talked about this since I wrote that book. That was in 1997. It's called covered call writing. And it's been around forever. It's a very popular strategy by people who know what they're doing on Wall Street and sophisticated, experienced investors. But it's probably something you haven't heard of, something you're not familiar with, and probably, I'm sure, something you're not engaging in. But it's really worth your consideration in an environment like this. When I mention covered call writing, the first question is, what on earth is he talking about? Well, covered call writing is one of 8 strategies within the world of options trading. Oh my goodness gracious. Options trading. Well, we know that trading options is very high risk, very speculative. You see a lot of late night infomercials with get-rich-quick schemes on trading options. And frankly, options trading is very risky most of the time. In fact, 6 out of 8 times. But you see that, as I said, there are 8 different kinds of options contracts that you can deal with. And of those 8, 6 are meant to make money. And they do so in a very speculative way. It's almost like a lottery ticket or a straight-out gamble. But of those 8, 2 of them are not speculative at all. In fact, they are meant to be defensive, protective. And one of them is called covered call writing. So I want to explain it to you here very briefly to give you a basic understanding of how it works. And then I'm going to show you an incredibly easy way for you to participate. So what is covered call writing? All right, I've just mentioned 3 words, and I want to break down each one of them. We're going to begin with the fact that you buy a stock or a mutual fund of stocks. Could be an S&P 500 index fund, for example, or an index fund of the NASDAQ or some other index. But you own stocks or a fund of stocks. Now, there's only one reason that you own it. There's only one reason anybody would ever own stocks or a fund of stocks. It's because you think that they're going to go up in value. All right, why else would you buy it if you didn't think it was going to rise? But while you're owning it, you're not getting any immediate benefit. You're not generating any income off of that investment. And that's part of your dilemma. So the first thing you're going to do is sell to somebody else. Oh, not your shares. You want to keep your shares, right? That's why you own them. You think they're going to go up in value. But what you're going to do is sell to somebody. Instead of selling them the shares, you're going to sell them the right to buy your shares in the future. Well, let me give you a very practical example of this. Let's say that you own a stock and it's worth $100 right now. And you think the stock is going to go up to 110, a 10% gain. In the meantime, you're not getting any income out of it. So you're going to sell to somebody else the right for them to buy your shares from you for $105. Now, if that happens, you make a $5 profit because they're going to pay you $105. The problem is you were hoping the stock would go to 110, which means you're giving up some of the profit potential. Why would you be willing to do it? They're going to pay you a fee. It's called a premium. And they're going to pay you that premium in order to get the right to buy your shares at 105. Why are they willing to do it? Because they agree with you that the stock's going to go to 110. They're happy to pay you 105. If the stock goes to 110, they make a profit too. You make a profit, $5, and they make a profit on everything above that amount. And you earn right now the premium, the fee they pay for this privilege. That gives you immediate income. So you're giving someone else the right to call your stock away. That's why it's called a covered call writing. They're calling the stock from you. And it's covered, meaning you own the stock. That's why it's called a covered call. You could do this on a stock you even didn't own. That's an uncovered call. We're not going to talk about that. Bottom line is this. You can generate income by offering people the right to buy your shares from you in the future, and they'll pay you a fee for that. If the stock never goes up, they're never going to exercise their option, but you get to keep their money. If the stock does go up, you sell it to them. But so what? You've made a profit and you've collected the premium. Heads, you win. Tails, you win even more. This is a really cool idea. Now, I'm sure your head is already spinning over the methodology of this. I've used jargon already, covered, call, writing, and premiums. There's all kinds of complexity in doing this. And I'm sure you don't want to go to school figuring all this out. You don't want to take the time involved in engaging in these options contracts. You're not even sure how to trade them in a brokerage account. Here's the good news. You don't have to. Today, there are ETFs that do covered call writing for you. One of the biggest, one of the most popular is coming from Global X ETFs. The symbol is QYLD, right? Yield. QYLD. This fund has $7 billion in it. That's how much money investors have contributed because they like the fact that this fund basically buys the NASDAQ 100 stock index and then sells covered calls, generating income. Income 6 to 12%. Now, the good news is you're generating all that income. The better news is if the stocks go up in value, you're earning that profit in addition to that income. This is why the fund is so popular and has $7 billion invested. That fund from Global X ETFs is one of just 14 options trading ETFs that Global X offers. And they give you a wide variety of options that determine how much income you can reasonably expect to generate, maybe as low as 6%, maybe as high as 12%, how much growth in value you can expect, maybe a lot, maybe a little. And this is why they offer a wide array. Some of it is passively managed using the S&P 500 or the NASDAQ 100. Some of it uses more active approach to investment management. The point is that there are a wide variety of investment options available with ordinary ETFs. For you, it's a set it and forget it approach, but it generates the kind of income that you're not able to find in other investment options. So I encourage you to talk to your financial advisor about Global X ETFs covered calls opportunities, because if this isn't something you've looked at in the past, it's certainly something to consider looking at right now. You can learn more at globalxetfs.com or talk with your financial advisor about covered call writing. I'm Rick Edelman. You're listening to The Truth About Your Future.
Want to invest in digital assets but find it all a bit complicated? There's actually a very easy way that you can invest in this new asset class. Simply choose the Bitwise 10 Crypto Index Fund, symbol BITW. It's the first and still the biggest crypto index fund. It owns the 10 largest digital assets and rebalances monthly, so you don't have to decide what to buy or when to rebalance. Bitwise does it all for you. At Bitwise, we want digital assets to be available to everyone, and that's why we work closely with individual investors like you, as well as financial advisors and institutions. At Bitwise, crypto is all we do. If you believe digital assets should be part of a diversified portfolio, take a look at the Bitwise Crypto 10 Index Fund, symbol BITW, available everywhere you get your investments. There are major risks to consider, including the loss of your entire investment. Before investing in crypto funds, visit bitwiseinvestments.com to learn about the risks with these investments.
This is a call to the self-starters, to the self-made, and the self-sufficient. It's time to declare a new kind of independence, because Edelman Financial Engines is here to provide tailored investment solutions for your kind of wealthy. You should expect more from your wealth advisors. Our investment management approach is based on Nobel Prize-winning research, and our planners don't sell products to earn commissions. And because we're here for those who question the answers, we model more than 38,000 securities, so we can better stress test your portfolio through thousands of scenarios. So no matter where you're going next, see what we can build for you. Call 833-301-4333. That's 833-301-4333. Or visit planefe.com/TAYF to get your complimentary financial plan. Edelman Financial Engines, built for those who built themselves.
Allow us to introduce you to Sabrina, an ordinary person who helped shape the future by putting her money behind the right ideas. Each morning, Sabrina enjoys a 20-mile bike ride and meditation that brings her serenity for the day to come. Sabrina is also accessing the companies that are revolutionizing the tech world by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be an integrated circuit engineer to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
I'm Rick Edelman. This is The Truth About Your Future. One of the things I like to talk to you about is, in fact, the future, being brought to us by Exponential Technologies, the latest innovations and advances, science and research that are bringing to us incredible innovations that are going to impact virtually every aspect of life on our planet. But sometimes we've got the dark side of Expo Tech, and I want to share with you one worrisome item. Back in 2018, you may remember the story when it came out several years ago. NVIDIA, that company is one of the leading manufacturers of the latest computer chips, the greatest technologies that are being used in computers and artificial intelligence. NVIDIA, back in 2018, created photos of people who don't exist, fake photos. The AI is so sophisticated that it could create an image of a person out of thin air, all by itself. Well, that was a little worrisome to a lot of folks. They were fearful that scammers would be able to use this technology to trick people. For example, they could splice your real face onto a person who's performing in a porn movie and then blackmail you. That's just one example. So the question that has arisen ever since NVIDIA demonstrated the capability of this technology was the question, can you spot a deepfake? That's what these things are called. A deepfake is when you see a photo or a video that was made by a computer, artificial intelligence, or a human. Was that a real video that somebody shot? Was it a real picture somebody took? Or was it invented on the computer and it is totally falsified? Can you spot a deepfake? Do you know when what you're looking at is a fake? Well, to find out if humans are able to do this, researchers used NVIDIA's technology and they generated 400 deepfake photos. Half of these photos were men, half of them were female. They were split equally among blacks, Caucasians, East Asians, and Southern Asians. And they then asked over 300 people to take a test. Each person judged 128 of those faces, and they were asked to say, is the photo a real person or is it fake? The folks who took the test were wrong 52% of the time. In other words, that's worse than if they had just randomly guessed. This is a little scary, and in fact, it gets even scarier. The researchers then asked the people to decide if the person in the photo was trustworthy, and they rated the fake photos 8% more trustworthy than the real people. This is worrisome. According to this research, you're not able to identify whether what you're looking at is fake or real, and you're more likely to trust the fake than the real. What might we get suckered into because of this? It's one illustration of how the technology is changing so rapidly, us humans are struggling to keep up. And that means more than ever, we need to be on our guard. It's the dark side of exponential technologies, and we need to be aware. Want to learn more about exponential technologies? Read my New York Times bestseller, The Truth About Your Future. You know, if you missed part of the show, you can hear and watch the videocast at thetruthayf.com. You can also watch my full-length interviews with leaders in the world of digital assets, personal finance, and technology. You'll find articles on everything from NFTs to Bitcoin backwardation. You can also watch my master classes, including The Truth About Crypto and Financial Planning in the Age of Longevity. It's all free, and it's all available to you at thetruthayf.com. That's thetruthayf.com. You know, you can ask me your questions here on the program. If you don't want to talk to me on the air, you could just record your comments on your smartphone and send them to me. That's what Peter did. He's in Garden City, New York. Let's listen in.
Hi, Rick. This is Peter from Garden City, New York. Great show, and thank you for addressing my questions. My question is related to automatic investment plans. For many years, I automatically contribute to my brokerage account and invest those money, small chunk of money, within the mutual funds that I own within that brokerage account. Since I also own exchange traded funds within that brokerage account, I was hoping to do the same, automatically transfer money from my checking account and invest those on a regular basis, a small amount of money using the ETFs. But soon after I realized this is a little bit challenging, so therefore I have a few questions for you. Is it possible to invest automatically or implement the automatic investment plan utilizing ETFs? If so, what needs to happen for this to work? I appreciate it you addressed this question. Thank you very much.
Peter, I appreciate your call and your question. Your questions really should be directed to your brokerage firm. Each brokerage firm has a set of not only policies, but features and services that they offer. And it's routine for brokerage firms to allow their clients to engage in automatic investing as you've described. It's dollar cost averaging at its best. Automatically, every month, a certain amount of money comes out of your bank checking account, goes into your brokerage account, and the brokerage account automatically buys a variety of investments for you. Some brokerage firms limit this automatic investing to mutual funds. Others also allow it for individual stocks and for ETFs, exchange-traded funds as well. So you simply need to check with your brokerage firm to see if they can facilitate automatic investing into ETFs. If they don't allow it, then you simply need to do it on a manual basis. You can have the money automatically go from your bank to your brokerage account. That's the easy part. And then from there, you would place a series of trades on a monthly basis. You might have to do them manually. You might be able to set up a recurring block trading where every month you buy a certain number of shares so that you don't have to enter all the individual trade data. But the short answer is talk to your brokerage firm. Tell them what it is you want to do, just as you've described it to me, and ask them how to go about doing it. Chances are they'll be able to give you a solution that works for you. And if not, at the end of the day, find another brokerage firm that'll cooperate. Pretty much that simple. That was Peter from Garden State, New York, here on The Truth About Your Future. If you want to ask me your question, do what Peter did. Just make a recording of your question on your smartphone and send me the file to askrick@thetruthayf.com. Time now for everybody's favorite segment of the program, Visit by my wife, Jean Edelman. Jean is a student of the healing arts, Reiki, traditional Chinese medicine, homeopathy, acupuncture, and of course, macrobiotic and plant-based cooking. Here's Jean.
All right. Well, wonderful to be with you this week. Today we are going to recap our self-care, our August month of self-care. And just review, I hope you've been practicing and taking moments to make the small changes in your day so that you're feeling better. So we have 6 pillars that we have been working on all month. Our first is our food, what we eat, how we eat, when we eat. We've gone over that. Our breath, how important our breath is, and getting movement into our day and our week. Very important. Our sleep. We talked about our sleep routine. Do we have a nice morning routine? How about our evening when we start relaxing and getting ready to have some good, solid sleep? Hydrating. That's a pillar. We need to make sure that we're drinking water. And nature. Making sure that we are outside, getting fresh air, getting our sunshine, getting our movement and breathing. Throw it all together into one big bucket. And then our emotions. Our 6th pillar is our emotions. How are we doing? Are we talking about how we're feeling? Are we sharing? Are we journaling? Are we taking care of ourselves? And are we tuning in? Emotions are so important. And let's make sure we've got some good tools to manage our emotions. So it's short and sweet this week. And it's all about you. You are amazing. You can make these small changes. You are a beautiful light in this world, and we need you. And we can do anything, and you can do anything you put your mind to make your path, to make your life, to make your day better and more joyful. Have a great week, everyone.
That's my wife, Jean Edelman, here on The Truth About Your Future. And you can actually watch Jean's Word of the Week. Watch the video at thetruthayf.com.
Need help managing the complexity of income needs in retirement? Meet Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Tell them how much you need and how long you need it to last. They'll estimate how much you can spend. Plus, you can start, stop, or adjust payments anytime without penalty. And with Schwab Intelligent Portfolios, you won't pay an advisory fee. Visit schwab.com/intelligent income to learn more about their modern approach to wealth management.
The Truth About Your Future is sponsored by Global X ETFs. Exponential technologies are transforming the world around us and creating new investment opportunities along the way. But where to start? At Global X, we have spent more than a decade focusing on long-term emerging trends, what we call thematic growth. While many of these disruptions are now part of our daily lives, like fintech and telemedicine, others are making their impact felt behind the scenes, or perhaps under the hood. Think of the lithium batteries that power electric vehicles, the rise of hydrogen fuel cells, or renewables like solar and wind, which are becoming increasingly cost-competitive. All of these themes represent vital components of a next-generation green energy economy that is more reliant on innovation and less dependent on fossil fuels. Learn how you can add these and other green investment themes to your portfolio at globalxetfs.com or ask your financial advisor.
Well, that's all the time we've got on The Truth About Your Future this weekend. Remember, sign up for my new master class. It's online. Financial Planning in the Age of Longevity. You can watch the class whenever you like. In my new master class, you'll discover the truth about your future, starting with the fact that if you're alive in 2030, you'll probably be alive to age 100 and beyond. Will your money last as long as you do? That's what my new master class teaches you. How to handle college and career, homeownership, long-term care, estate planning, and of course, your investments. It's online, financial planning in the age of longevity. Register now for free at thetruthayf.com. That's thetruthayf.com. See you next week.
Bye-bye.
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 I'm sorry, what? What part didn't you understand? The buh or the bye? Bye-bye.
The Truth About Your Future with Rick Edelman has been brought to you by Bitwise, the world's largest crypto index fund manager. As crypto grows, Bitwise believes everyone should have a simple and familiar way to access it. Bitwise makes crypto clear. BitwiseInvestments.com. And by Global X ETFs. For more than a decade, Global X ETFs has been dedicated to providing investors with unexplored and intelligent solutions. Learn more at globalxetfs.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100. Invesco.com/QQQ. Stay tuned for Everyday Wealth with Soledad O'Brien and Gene Chatsky from Edelman Financial Engines. Everydaywealth.com/radio. EFE and The Truth About Your Future with Rick Edelman are unaffiliated entities.
Get the truth about your future every weekend with Rick Edelman. It's thetruthayf.com.